Alrighty, good morning everybody. It's Thursday, June 9th, 2022. Let's go ahead and kick on right into it. I want to go back to yesterday and just show you, despite the market being, and I'll just go to the higher time frame really quickly, despite being choppy in this, sideways, balanced area of the chart, we still have a lot of beautiful technical moves off these levels. So I just wanted to show you what happened here yesterday. Let's go back to the open. So going into yesterday morning, we said our first support level was going to be 29.50 to 30.50. Unfortunately, as we were selling off, things looked pretty weak to me, and I went ahead and tried to play against our support level, which was a big mistake because we came right into it, peaked just below it by less than maybe a point, and then went ahead and came back up to the top of the range. So that first trade obviously did not work out off the FMA, but just interesting to note that we came right into that first pocket, and again, it's like hindsight is 2020. That seemed to have been the perfect thing. If we would have just bought the bottom end of that pocket, we would have got the biggest mood of the morning. So things came up. We came right into our OPL, got a pullback, and actually, I want to show you from a Fibonacci perspective here. When we bounced out right after the open here, about 2 minutes after the open, and we pushed up into the 200 moving average here, made a double top, and then went ahead and pulled back. We came back to the tick to the 50%. Okay, and then once we advanced a little bit higher, let's see if I can grab this leg and bring it up. We came right into the OPL, like I just said, and then pulled back again. That leg then pulled back and bounced one tick in front, one tick or two ticks, depending on which level you chose there for the 50%, made a double bottom at it, and then went ahead and continued to traverse higher. So again, just interesting to note how all the fibs are still working despite a lot of the chop here. And then as we started to break out, remember I told you in the trade room, since we could not really get through the OPL, I was expecting either we were going to start to break lower, or if we could get through that high, we wanted to be buyers. So eventually here, just about 15-20 minutes into the open, the market did hold the 200 moving average. Look what happened. We've dropped below the 200 in the pre-market, basically started holding below the 200 just after the open, and then bam, we popped up, pulled back and held above the 200, and then came up and broke through the high of the morning there. So at that point, I told you we want to get long. However, we didn't catch the little small pullback right to the high, and so there really wasn't anything to do until we got a pullback, unless you just wanted to buy the market blindly. And so we didn't get an opportunity, in my opinion, until this pullback right to one tick in front of the FMA here, and then a nice test to the tick right here. This is where I got in. I had a trade. I told you guys you can try getting long right here. My entry was one tick below the low there, so I didn't get filled. So when we came back and tested it a second time, again, nice little local short time frame bullish divergence there. I went ahead and tried it and told you guys another opportunity. We got what, maybe a 7-8 point bounce out of there. Pull back to the 200, and I told you this little pocket right here would be another little opportunity to get long. Sure enough, they did get a little peek through it, but came up again for just about another 7 point bounce, at least from where my entry was. And then from there, we failed. And I'm going to bring up these fibs again. Look at what happened here. The high of the morning, down to this pullback. We bounced right to the 61.8, got a pullback to the FMA, came back up to retest that high and failed. Now look what happened. We held below the FMA. We held below the 200 here. In fact, beautiful little tag right there of the 200 for the sell-off. And then let's take a look. It kind of went sideways for a bit, but it looked like we were going to break lower. There was a good opportunity for another probably 5 to 7 points off the FMA. And I told you guys, once we didn't get follow through to the upside here off the 200, that we were going to just be patient because it was probably going to be sideways. And sure enough, it was sideways and choppy for quite a while. So And despite that, you can see there were so many parries off of our moving averages, off of our OPL, held the major eye level in many respects throughout all the chop. And then finally, while we were in the sideways chop, we eventually got a rejection right at the 200, fell down below the FMA again. And this trade really was one of those picture perfect setups. As we sold off below the 200, broke below the FMA, and started to break through the OPL and the major eye level to the downside, this right here is one of those beautiful setups. Major bearish divergence right off the FMA and the major eye level. So that was really, really nice. And then we came down, and interestingly enough, bounced right off that red line we've been talking about all week at 2150. Came down, and then basically what happened was we sold off and then came right up that low of the morning back over here. We came right up to here and failed again. And then for a while here, held the next expected support level and played around sideways again, broke down, and where did we bounce? Around 10:30 or 10:40 Pacific, right off the major eye level and our next pocket of expected support. Came back up to try to break through the 50% of the previous day and that red line again and our 200 moving average, but just no strength. So the market just tried to push, could not get through. So I'm telling you, even though the market's sideways, even though the market is not necessarily within some type of major trend, it's still holding these levels to the tick. It's still using the FMA and the shorter and the SMA almost all the times we've tested them. And then it just again went sideways again. Well, you can see that major or our minor eye level and the pocket we expected to hold became a pretty strong area for the bulls to defend. And then again, we've just been really choppy, very balanced, and sideways here. So coming into the open, or actually going into the overnight session here, you can see we never could appreciably get down below the low of the day before there in the Globex session. Tried to, but just could not. Continued to hold the close of the day before and the OPL here in the overnight session, and then finally broke out to the upside. Now look what happened when the market broke out, got through the OPL, got through the VWAP, got through the 200, through the FMA. We came up, pulled back to the FMA, continued to hold the FMA, and then came right to our major eye level and then failed. Okay, so it just blows my mind when I come here in the morning and I go back and look at all this stuff, and just it blows my mind. So we held 41.42 quarter, give or take, right? Came up maybe 2 points against it and failed. And now here we are in the overnight session coming into the open. We've come down, held that friggin' red line again at 21.50, bounced off, held the 200, and then started coming down. Now this trade, I came to my charts like 2 minutes too late because this was beautiful. As we're selling off here, getting through VWAP, breaking down through the OPL, comes right back to the 200, the OPL, and the close of the day before with a major bearish divergence again, and then fails. So that is something that I would have probably tried had I been there, but wasn't. And that was a divergence on the 1 minute, the 3 minute, and the 512 right there. And then now we're going ahead to pull back right into our next expected support level right now, holding the low of the overnights of the day before. So all beautiful technical stuff going on, despite when you zoom out and look, constant back and forth balance, right? With all it being said, look at what we're coming into right now, our next expected support down here. Let's go ahead and jump into this morning's levels. I'm going to bring up the higher time frames. We'll look at the daily. I don't think there's much to really eke out of that because it's just been up and down, up and down, up and down until we can get through 40, 70, 150, which we've been watching all week, or until we can go ahead and break up through 4,200. I don't know if that daily information is really going to give us anything. It's just going to show that it's been really, really sideways. So I'm going to not really much to say here on the daily. And the 4 hour, well, I forgot to go in and mark this here. We got a decent bullish divergence in our overnight session which did lead to the high of the overnight session up here, which failed right at the major eye level again. So the major 4-hour bullish divergence that we got in the overnight session got whatever it was going to get, pulled back, and now we're breaking those lows right now. And what I'm noticing is that we actually do have what could be, as we're breaking lower right now, maybe a divergence again because we're breaking higher on RVI, right? So I'll continue to watch this. This candle closes 30 minutes after the open, so we'll pay attention to that and see if it does hold off one of these levels, and maybe we get some agreement on the hourly. I'm just looking back to my daily here really quick, just to see if there's anything from a divergence perspective that would give us any type of edge, and don't really see anything going on. What I see is that we're higher than the low we made 2 days ago right now, and the RVI is lower. So again, it looks similar to the 4-hour from the current low we're making. Once the low from 2 days ago breaks at 40.76, then we won't have that there on the daily, and potentially this 4-hour could change. So the takeaway from all that blabber is that we had a bullish divergence. It looks like it's being negated. However, we could see something form here. So I'll be watching that as the market pulls back. And then finally, we'll get down to our 60-minute and look at all these levels. So first things first, the larger time frame stuff that we're going to be pulling back into is all the same. And all of our major and minor eye levels are all the same. Nothing has changed down below 41.70, 150. So I'm not going to spend time mentioning all these levels because I've mentioned them for multiple weeks now, or at least for a week. So we've got that. And then again, on the other side of things, if the market goes ahead and pushes through 4,200, then all the levels that are above us are the same levels that we've been monitoring and watching and talking about for I guess even before the beginning of this week. So for a while. So I'm not going to spend time talking about the levels above or the levels below this weekly range that we're stuck in right now. I just want to look at what's going on inside of the chop box that we're playing around in. So in order to do that, I'm going to go down to my 10 minutes so we see things a little bit clearer. And so that's it for up on the 60-minute here. I'm not going to waste my breath on the levels I've been talking about over and over again. So let's go down into the 10 and take a look at what might happen here if we bounce back up into this weekly chop box. So right now we're hitting our first expected support level, and that would be 40.90.50. In fact, what is that swing? Yeah, I guess. That's ugly. I don't know why that wasn't cleaned up, but we'll call it 40.90.50 right up into that swing at 93. And look what's happening right now. We're pulling back and bouncing right outside of that. I mean, it's like a day in, day out. If you just play the levels, man. So pouncing off of this level and coming back up. Notice we got the rejection that I mentioned a few minutes ago, right in front of the previous daily low. And we'll see what happens. If the market can break up through that high and get through the low of yesterday, we still have 41.08.50, which again, despite all the chop, was working to the tick in so many instances through the overnight session and yesterday. So we've got that there. You can also see two nice major 10-minute wicks coming right off that level in the overnight session there. So coming up into there could be a little bit of trouble if the bulls aren't strong. And then a little bit further, if 41.08.50 gets breached and the market starts pushing higher, well, what do we have? We've got the close of yesterday up here at 41.16 and the OPL at 41.17. So we've got a nice little pocket there right inside of that. And then if it continues to push through there, we're right back to that red line at 41.21.50. And then this swing here I think is pretty important. The swing is at 41.30. So I've got a little pocket here, 2150 to 30. Sorry, the low here is 4123.50. So we've got 4121.50 to 4123.50 there as a level that to me would make sense. And then we're up into another major swing here, coming all the way back from the day before at 41.28 That's a level there that in between this shaded zone and this shaded zone above would be the level I would expect to potentially hold. And then if that doesn't hold, we're up into 50% of the day before, and then there's a swing here up at 34, let's call it 50. So we've got 32.50 to 34.50 as that next pocket. Any further than that, it's right back to the major eye level and the high of the overnight session up here. That would be that next expected potential trouble spot for the bulls. And then it's back up right into the high of the day before at 60. And then we've got that major level, 64 to 65 up there, where we got two rejections throughout the week. And then again, once we get up there, we got the 4200 major eye level. You can't ignore that 8250 and 89 are in the way. And then once we get through 4200, like I said, all the same levels up above. So just to run it through it one more time, we've got the pocket we're bouncing into right now. If that breaks down below, we've got 4080, which again has worked over and over again. And then we're down to the low of last week at 4171.50. If that breaks, all the levels down below that we already have on the chart and should be aware of. And then if the market holds and bounces back up, we've got the previous daily low, 4108.50, and then we're into 4116 to 17 4121.50 to 23.50. We've got a major swing at 28 and then we've got the pocket from 4132.50 to 34.50, and then it's back to 42 the major eye level and the overnight high. So with all that being said, I think that's basically it. I will not be here to trade this morning, so I will leave the charts up. I'll let you guys navigate. Hopefully by now you understand how to trade what we're using. So I'll leave the charts up. I will be back for our study session today, so we'll be looking at how to keep a trade journal. For those who haven't been around for a while, this will be important information. But if you've been around for the last year, you should be aware of how I'm keeping my trade journal and how I suggest you should keep it as well. So that might be a good refresher for you. So I will be back for that, and wish you guys a great morning. And to those out on YouTube, hopefully this stuff is also helping you orient yourselves for coming into the open. So I'll leave it at that. We've got a couple minutes before the open. There is possibility it's just going to be more chop and garbage until tomorrow, when we have some more important news coming out, or at least the numbers for CPI. And I believe we also have CPI and then consumer sentiment at 7 a.m. Pacific. So about 30 minutes into the open when we get to tomorrow. So maybe those two news events is what the market's waiting to digest and then react to. But right now, who knows? It's been quite a messy market for 2 weeks now. So have a great one, guys. I'll see my members for our trade journal study session. And that's about it. So take care.